You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good afternoon, everybody. Look, Kevin Green from Schwab Network. Kevin, I got to ask, world's going to hell in a handbasket and the market goes up. What's going on, man?
Yeah, we are seeing a little bit of a bid in the market here today. Obviously, on Friday, we had some concerns around the geopolitical risk in the Middle East. And I think you just saw a de-risking type of an event going into the weekend because of the uncertainty that was actually taking place. Now, we did see a little bit of a bid happening today, and it wasn't just concentrated in communication services or technology. You started seeing that actually broaden out to consumer discretionary, financial. So I think there's just a little bit more, some dollars that may have been taken out of the market on Friday being put back into work. I don't think we're out of the woods yet when it comes to this event, but it does appear that the market's willing to maybe put some risk out there, given the circumstances that we've seen so far.
Yeah, and I was at, over the weekend, I was in New York all week last week, and I can tell you that the concern on Wall Street is zero. They're not concerned about all of this. They feel like everything's going to work itself out. We're seeing Iran today crying uncle, with the president saying, hey, should have said that last week or the week before, not started throwing bombs. China, Taiwan, Ukraine, NATO, and obviously this week is the G7 summit. There is a lot going on at one time, including economic data. Talk to me a little bit about what your thoughts are going forward. You saw gold at 3,400. You saw the stock market kind of falling off last week. But I think, tell me, are the investors, whether they're institutional or retail, are they just confused?
I don't think they're confused. One, I think we have this buy the dip mentality. So anytime that we have any type of pullback, I think people are just automatically trying to put dollars to work until that doesn't work, and it has been working pretty well. So I think that's one item there. Two, when you start looking at the sectors that were actually performing today, how much geopolitical risk do they actually have? Right. Information technology, how much risk is really out there? Maybe some exposure when it comes to some Israeli, companies or deals that they have with Israeli companies, but outside of that, not really that much risk. Communication services, for the most part, social media companies are probably making hand over fist over this event. So I think that's also another thought there. You did see a backing out of the energy trade. I thought that was actually very interesting. People are selling out of the energy companies, and rightfully so. If you want to get energy exposure, try to get as close as you possibly can to the product that you want to trade. If it's oil, then you have oil futures. If you don't want to trade that because of size, you have micros. If you don't want to do that, you have USO, the ETF, you have other ETFs out there. So utilizing an energy company as a proxy is also kind of fairly difficult to do. So you did see a pullback when it came to crude, a pullback when it came to energy. But when you start looking at some of the sectors and you say, hey, if this were to escalate, how much is NVIDIA going to be impacted? How much is even an AMD? AMD caught a solid bid today.
It really did.
And
you talk about energy. CCJ Kamiko is now up 4.5%, almost 4.5%, 4.05 on the close. Roy, which was uranium as well, the ETF. Uranium seems to be hot. Lithium seems to be hot. Is it a rotation out of the oil into uranium?
Yeah, I think you have a little bit of a secular trend that is there. A lot of decent regulatory comments coming out of the White House regarding trying to fast track some of these small modular nuclear reactors. So you are seeing a lot of these companies really catching a bid. CCJ itself, pretty much the only big major supplier of uranium that's out there that is not full on Russia exposure. We know that there's a little bit of an issue there. Probably not so much 2025, but 2026. When it comes to uranium supply lines, that's probably going to be something that is impacted here. So there's definitely a trend that is there. You also have to look at the speculators as well, leveraging those options in order to try to squeeze some of these names higher, I think is also something that's taking place. Look, not trying to take anything away from CCJ, but this is probably the the most aggressive buying and price action that I've seen to the upside for this name in a very long time. And I think that's, I think options also play a part in doing that. SMR as well, New Skill, saw a pretty decent bid this morning as well.
Yeah,
So I think it's a different trade.
You talk about that crazy play out there with Elon Musk, but the White House not playing nice with Elon Musk right now. You can say Tesla, but EchoStar today, SATS, SATS, now up 49.11% on the back of that. The president saying, we've got to look at the FCC fast-tracking other companies besides Elon's, right?
Yeah, you have a lot that's coming out of the White House, and some bids are being taken place here. I'm not too familiar with that particular symbol,
Okay.
but yeah, you are. I mean, even the phone announcement and people, well, hey, was Starlink going to be a part of that? Even that kind of came back into the atmosphere. So there's a lot that's happening on a daily basis here. I think if you kind of look at it once again, the geopolitical risk, I still think, is a factor that we have to be mindful of on the energy complex. I think that is something to be said there. I don't think the defense names are completely yet. Lockheed got completely destroyed here today, but RTX is still in a decent uptrend. But I still think that we're kind of in a lull. I think the market wants to see a decent outcome. I don't know if we're going to have one. Hopefully we do. And if we are, then I think we continue to move forward. We have the economic data this week too. We have the Fed, we have retail sales tomorrow, we have a break on Thursday, and then Friday we have OPEC. So a lot that's going to be on the calendar to create maybe a little bit of vol, or maybe even a vol dampener, which would be conducive for equities moving higher.
Yeah, I just looked over for Lockheed Martin, down almost 4% today. The tune in Ukraine has changed a bit. Zelensky now saying, I wish and I hope that the money, I'm raising cash now to buy U.S. weapons as opposed to the United States just handing us weapons. Do you think that's going to happen?
I think they're going to try as much as they possibly can. Ukraine's in a very tough spot, though. They're going to try to raise money, but they're not going to really raise capital. They're still going to have to leverage some form of assets in order for them to be able to buy. And yeah, they're going to try to purchase as much as they possibly can. But I do believe that Ukraine still has the European nations in their corner. So they're going to be able to get, let's say, 75% of the weapons that they need. But, that last, let's say, 15, 20%, where you're talking about the HIMARS systems and Patriot missile batteries and things of that nature, that's specifically for the United States. That's going to be something a little bit difficult that they're going to have to probably come out of pocket for. But what's actually very interesting is that we have this form of a deal, this mineral deal. I don't know if it's actually fully ratified. Yeah, I don't know. But what's interesting is actually Boeing's, I don't want to say their headquarters, but Boeing's does have an office within Kiev that was actually hit, I believe, on Thursday or Friday of last week. And you haven't heard a peep out of the White House regarding that, or even out of Boeing as well. And I thought that was actually very interesting that the Russians felt like they needed to target that building. So hopefully this economic agreement that we have actually does come to fruition, and we're able to provide the aid anytime that any of our assets over there are threatened. But we'll see if Ukraine's going to be able to pull it. That the Ukraine conflict, I don't think there's going to be any. I think that there's probably going to be a better chance of a resolution between Israel and Iran than it is Russia, Ukraine. It seems like the Ukrainians are pretty much dug in right now.
It's a good point.
So is Russia.
And the G7 being in Alberta this week, one of the things when I worked in NATO and on these G7, some of the 8, I did work with some of the 8 when they kicked out Russia. I have to ask, I mean, the biggest thing that we always want to see at the end of this series is the communique. What do you want to see being put in that communique that might ease the minds that the world's still together?
Oh, that's going to be hard because you're already hearing from the White House that they're not going to sign pretty much like half the statements that are going to be coming out.
And the last time Trump walked out of it, right? So
yeah, and so that's it's unfortunate. You are seeing some individuals today, though, seeming like maybe it's because it's on Canada's turf. They're able to kind of talk and handle.
Right. Is it Canada or the 51st state? I mean, I'm not sure.
Right. Yeah. But it does appear that Carney did actually cut off President Trump during a presser and said, let's kind of move on here. So unfortunately, I don't think you're going to get any type of you're not going to get a universal statement as far as support pretty much probably for any item. United States is probably going to hold out. And unfortunately, I don't think that's so much culture or belief in certain areas of geopolitics. I think that's also trade deal and money related. unfortunate, but I think that's probably another area that he's really trying to leverage, and maybe making some combative statements here kind of pushes these trade talks along, especially if you're looking at like the UK, which it seems like the UK they believe that they're going to be able to get a deal done by the end of this whole thing.
Man, you took the words out of my mouth. I mean, out of all of the countries and all the trade deals, UK seems to be the closest, and the rest of them do not. Japan seems to be backing off a bit. Almost all of Asia is backing out of these trade deals. Mexico and Canada saying no so far. I mean, the president is having that bad year so far. What is it that you're seeing that is actually good coming out of the White House? Doge fell apart. He's already had some people leaving the administration. What out of this chaos? Is there any green spanks to say it? Green shoots. What are the green shoots?
Yeah, and I don't want it to get political at all. I don't know. I think if you look at it from a military standpoint, and it's only a very small slice here, getting additional military funding and resources for bigger projects that do take time. The president has done a phenomenal job of trying to get that. It seems like that even if the big, beautiful bill does not get through, they probably will have a separate bill to kind of push through the defense spending. It seems like on both sides, they're okay with that. And in Trump 1.0, they did a good job with obtaining the material and the resources and the dollars needed to take on the bigger projects. Because usually within administrations, they look at military projects that are maybe 3 years, 4 years, so they can kind of show that they have some type of progress being made. But it seems like the president's willing to take 10-year, 15-year projects and we're actually putting dollars to work. Yeah. I think that's a good thing. Unfortunately, a lot of the other stuff, I think, I don't think that they're great. Domestic policy, I think, is a little bit weak, and unfortunately, kind of splitting the country a little bit more. And then foreign policy, for me, you either have dollars to be able to put to work, you have access to our markets, our financial markets and our credit markets, and you have defense. And unfortunately, it seems like we're pulling back on access of all three. And you need to at least have one of those three pillars in order for us to still convey strength. And that's long term. I'm a little bit concerned about that type of posture, especially on the defense front with our allies.
And I'm looking at the 10-year right now, 4.48%. Had a wacky day today again. The 10-year moving all over the map. When you raise rates right like that, percentages go up. That means they're trying to attract investment, and they can't seem to do that, right? How is the auctions going? How do you feel that is the United States still an active place to invest for foreigners?
Oh yeah, definitely. I don't think the American exceptionalism is going away anytime soon. I think right now we're finding our equilibrium. We're in a unique situation compared to other countries, or if you're looking at the EU as a country, a conglomerate of countries here. The auctions, 10-year, 30-year auctions, we had those last week, went good, very strong. 20-year today, still kind of weak, tail on that one. That's a weird one, so I don't get too concerned about the 20.
I was going to say,
not a lot of people
20-year to anybody. Is anybody actually buying the 20-year?
Yeah. So no one, but the 20-year though, if you look back, I believe is May 21st. The week auction we had the last time for the 20-year really kicked off the whole concern and yields moving higher here. We didn't have that much of an aggressive reaction today, but we still had a decent move. But if you kind of look at the 10-year, it's really trying to stay, let's say, within that range of 4.6 and 4.3%. So if it can still stabilize, I think that's really decent for equity markets. Dollar is trying to hold that 97.5 level, 96, 97.5 level, if you will. You get concerned, yields going up, dollar going down, equities going down as well. You need to have one of those three really trying to hold up here. But 20-year wasn't that great of an auction, but 10s and 30s did fine. That's really what matters.
Yep, agreed. And I'm looking over at the Dixie right now, 98.12. This morning I heard from Steve Flanagan, former head of JP Morgan's Forex desk, saying that we could see as low as 94.5, 95 on the Dixie. You agree with that?
Yeah, I think it's possible. Technically, it is. If you look at a technical chart, bring up a monthly chart, the equilibrium level is around 95, 94.8, I believe. If you look at the last 20 years on the Dixie, so that it is definitely possible. The question about the dollar, anytime that we talk about it, it's not a fact of can it get down to 94. It's how fast does it get down to 94? It's not a question of can it get back to 108? It's how fast can it get to 108? The rate of change of the dollar is really what's more important to me rather than the actual number itself, because a weak dollar will also then spark export demand. At least that's going to be the hope here. That's going to spark export demand. That would be really good for manufacturing, industrial companies. You're looking at the Caterpillars, the Deeres of the world, things of that nature. And does it erode the purchasing power of Americans? It does. But once again, it will have some stimulative effects in other respects of our market. So can it get down there? Yes. I just don't know what the timeline would be for that. But a monthly chart definitely kind of shows that 95-ish area is the kind of that equilibrium. Yep, you kind of got that right there.
Right in there. We like that. Okay. So when I'm looking at the charts right now, I have to ask, this morning and over the last few weeks, I've been saying that charts are kind of useless right now every time a Trump tweet or a headline comes out. Is there something on the charts that you're looking for? Is there some kind of indicator? We know that there's over 450 indicators. Is there any indicator that you're actually applying to your charts that you're looking at right now?
Yeah, what makes me feel comfortable is weekly charts and MACD and RSIs, and that's all I look at. So I look at MACD crosses, bull crosses, bear crosses on weeklies, and I look at RSI double bottoms, or basically higher lows, or lower highs, if you will, if you're looking at divergences. That's usually my core, and then I can look at volume too. You can pull up a volume profile. I also use options flows and look at dealer levels and things of that nature that kind of give me that confidence. But I keep it real simple: MACD, RSI, or I'll use a CCI too. No, I will shift between the two. So RSI is looking at relative performance over the last 14 days or whatever you have as your period of days. CCI is looking at the relative performance of the 14-day moving average over that 14 days. So CCI smooths it out a little bit more. You get a little bit late to the party if you're just using CCI itself. But once you do get a confirmation on that CCI on the weekly, it's usually fairly reliable. So the RSI, I kind of check that one out first because it gives you the signal first, but you really get that confirmed by CCI. It was a smooth.
I'm going to put that chart up there too as fast as I can for everybody to see. I'll pull up SPY for everybody. So the bigger market side of this. This is the weekly chart, and then of course the daily chart. And there's your CCI. I like the CCI Turbo Woodies. I like that a lot, and I agree with that too. So right now it's kind of showing a little bit, Kevin, that the market's going to be toppy here. Is that right?
It is showing that it is. I mean, it's over the overbought territory if you're looking at the CCI. Once again, I also couple that with the MACD. And so the MACD right now is still in a bullish formation. That 12 EMA is above that 26 EMA. So until you start seeing that really kind of close, I think that the primary trend is still to the upside. Now, if we're talking about the weekly chart. You go to the daily. If you go to the daily, it does show that we are stalling out. We are losing momentum. MACD actually was in a bearish formation pretty much all last week. But I look at that week. Yep, that cross there. Usually, if you go back on the S&P 500 and you see that MACD cross in the bullish formation, you usually see about 4 weeks to 5 weeks of continuation in the same level. Now, it doesn't mean that every single week is going to be a bull week, but it's usually a very decent swing indicator for me. And then I look at data. I trade on hourlies. I trade on minute charts as well. But if you were talking about a straight up swing, Kev, if I'm looking at this chart right now, on the weekly, I still have to say, hey, this is looking pretty bullish. You can also look at the RSI on the weekly as well. We were actually in a bearish divergence for a very long time, actually. And we actually broke that bearish divergence downtrend on the RSI. I'm looking at the E-mini S&P 500. I'll bring up the SPY, but it shows the same thing. So breaking out of that bearish divergence, that officially breaking out of that was actually pretty decent. But yeah, CCI is hinging a little bit. MACD is still holding up. We're losing a little bit of steam. And what I do is I just drill down. I go down even more and say, okay, maybe I can put a trade out for a week or 2 weeks or 3 weeks or what have you. What's the daily show me? The daily is where I get concerned. Because MACD, once again, has had a bearish cross basically since June 12th. So Wednesday of last week, 12 EMA is below that 26 EMA. You look at CCI kind of making lower highs, maybe. Kind of depends on if you squint at it a little bit. So daily kind of says, hey, there might be some trouble ahead. But if you're looking for swings, if I'm buying 3 weeks, 4 weeks out on options, I'm probably still going long.
And the same thing with oil. I mean, it seemed like we had a breakout now with those headlines, but a little bit of a pullback today on the USO.
Yeah, for oil here, real quick. So for oil, I'll use the CCI, MACD. Once again, I have the 20-day, 50, 200-day moving average. But for oil, Stephen, I don't know if you have Anchor View. What was that, Trading View?
Yep, I got them all. Which one do you want to use?
Yeah, so if you anchor VWAP from, what was it, March of 2022, I can get you the actual, March of 2022. Give me 1 second. I'll give you let's say March 7th, 2022, anchor VWAP from that. So the highs of 130.5. And if you look to see where we've been rejecting over the last couple of trading sessions last 2 trading sessions, it's that anchor VWAP from those Ukraine-Russia conflict highs. So there's a area of resistance that's sitting here. It's the 200-day moving average is pretty much at that level too, fairly close. It's sitting at around $80. But
it's interesting you said DMA. Over the week, I actually was hanging out with Carter Worth from Worth Strategies, and he does not like the 250 DMA. He likes the 150 DMA.
Okay, I'm actually a fan of the 210, but the 210, if you look at it, once again, I kind of look at I do a lot of data analytics. If you kind of back test the 210 moving average over the last 30 years or 40 years, actually is a little bit better performer than just the 200-day moving average. It's an extra 10 days. But actually, if you kind of look at the back testing and show firm support or resistance, it actually does pretty much hold up there. 10 days could be 10 days, but if you wanted to get really precise, the 210 daily moving average for me, and everybody has their own. And I'm primarily a commodity trader, so like a lot of commodity traders will look at the 9 EMA, 921 EMAs, but I kind of go back and look at the 20 days because if you're building out algorithms, in my opinion, arithmetic type of systems seem to still be a little bit more prevalent. And if more people kind of believe in a certain moving average like the 20. It seems like that is an area that's a moving average that usually holds up for the most part. But EMAs work too. It just kind of depends on your flavor.
And Oracle, I just brought it up too. I like this charting type talk. Oracle breaking out a bit here. Is this the top here, Oracle?
I think so. On Friday on Fast Market, or not, what was it, Next Gen Investing? No, it was Fast Market on the Schwab Network. I did an example trade, and they're just examples, not real money trades. I don't have this trade on, but I did an example trade last week of that 215, 205 put spread on Oracle, expiring the week of 4th of July. So, which is the 3rd of July. The thing with Oracle, nice breakout, hell of a move. Go back and look what happens with Oracle when it has these moves. This isn't the first rodeo when it comes to Oracle. And unfortunately, this isn't the first rodeo for their leadership team to completely smash the street's expectations when it comes to guidance. But the problem is now they made that bar very, very high, Stephen. Very high. They did the same thing coming out of COVID-19. And usually when we get these breakouts, might get a follow-through week, but sometimes we do actually get a lot of times we actually do get a pullback here. I'm looking at the daily chart. I got 2 gaps to the downside on the daily, 2 outsized volume candles and options positioning or options flows that were literally off the charts. For me, I feel like that's not sustainable. I'm not saying that this is the top. It's never going to get here again. I think it comes back and at least tests that 200-day moving average though. And that spread was going for what, $1.65, $2.
Wow.
So you're looking at a 4 to 2. You're looking at basically 2 to 4 risk reward.
Yeah.
Actually, like a 4-banger.
4-banger.
If that trade was to go through.
We'll see. And your risk is to 216 right now. So a $5 risk, risking that to get to 200, right? So to get to, that's like 2 to 1.
It was 215. What was it? 215 to 205, if I'm not mistaken.
Yeah.
It was a 10-point spread going for $1.65 at the time. I was trying to, for the example, it was going for $2.25, but when we looked at it, it was going for $1.65. So 10-point spread to the downside. Long strike was at 215. Short strike, I believe, is at 205. Looking for the 200 as an area of support. So I always undercut my strikes too. So if I look at 200, I'll undercut that and say, hey, if I can get to 205, it'll be decent.
And I was talking to Dan Ives over the week too as well, and I saw the exact same thing. The Taiwan Semi, TSMC, right? Stocks and Taiwan Semi for the weekend. TSM. Yeah, sorry, typing too fast here. There you go. Oh, there you go. And look at the same thing. I looking at this, and it seems to be toppy here, but Dan Ives considered to be still bullish on Taiwan Semi. Are you as bullish on Taiwan Semi as he was?
I think the fundamental landscape for Taiwan Semiconductor is definitely bullish over the next 5 years, 10 years. They produce 60%, 65% of the world's chips. They ain't going anywhere else. And Samsung's doing the rest of that bid there. It's going to take way too long to get our fabs up and running. I think Taiwan Semi's has the moat. Here's the thing. It has the moat, and we're not even seeing the expansion story on handheld devices yet, which is really their bread and butter. They make more money on handheld devices than they do building out GPUs for NVIDIA. I mean, when they first started out, I think they only had like a 7.5% to like a 10% profit margin on those NVIDIA chips when they first started out, which is nothing for them. So obviously they have more customers coming to them wanting to build out their chips. Their pricing structure is a little bit different, but there's not a lot of companies that can do what Taiwan Semi can do. That being said, it's never traded at a significant premium ever, really, because you look at it and it's kind of like you treat it as a materials play for semiconductors, right? It's not the shiny object. And I'm trying to draw a comparison. Materials never trade at a really decent premium either, right? But they're usually the nuts and bolts that you need in order for you to build something out. I look at Taiwan Semi as the same here. What is interesting, it makes me a little bit nervous. Does it look toppy here? It does, but we did have a decent little reversal candle last week. And the other thing is that we do have a gap that still has not been filled to 220. If we were sitting at 220 right now, I would be more on this thing is probably going to pull back here. But I am mindful of that gap to the downside that's still technically open here. So that's a tough one. If you look at the semi space today, man, I don't know what's going on with AMD. This wasn't one of those days where it's like, everybody's just piling in. That was structural buying for AMD today. If you pull up the intraday chart and bring up the 1 minute or 5 minute chart, you look at that volume, there was somebody layering in very aggressively. That's not just retail squeezing shorts or anything of that nature. So I feel like there might be something that's on the horizon here. Unfortunately, it's coming up close to a gap. I mean, you have another $6 to the upside for that primary channel that we've had that's been intact here to be really challenged. But I am being mindful of that volume bar. That volume bar today literally has eclipsed some volume bars that we've seen for earnings for AMD on zero news. So that tells you something. That's one I'm keeping on the radar here. I hate to chase it here, but you don't see that type of aggressive buying that often for a name like this, for a name that has disappointed the street so many times.
I like that. Don't chase. All right, Kevin, I'll keep you chasing here too. Won't keep you any longer. Kevin Green, Schwab Network, the man. Listen, I'll see you right back here next week, man.
Appreciate you.
Bye, Kevin.